In the mid-1990s, Marvel was bankrupt, not declining, not struggling, completely bankrupt. Its stock had collapsed. Creditors were circling. And some of the most famous fictional characters on Earth were no longer under the company's control. Spider-Man, the X-Men, and the Hulk were already sold off. By every financial rule, Marvel should have disappeared. Instead, it became one of the most powerful entertainment empires in history. Marvel began in 1939 as a small comic publisher, later known as Marvel Comics. Its business was simple and fragile: cheap paper, mass printing, and fast distribution through newsstands. The goal was volume, not longevity. Characters were created quickly, writers were paid modestly, and intellectual property was treated as disposable. Marvel wasn't building an empire, it was filling shelves. During the 1960s, Marvel exploded culturally. Characters like Spider-Man, the Fantastic Four, and the X-Men transformed comics into mainstream entertainment. But financially, the company remained weak. Comic books were cyclical, margins were thin, and retailers held most of the power. Marvel had fame, but very little control. In the late 1980s and early 1990s, everything changed. Comic books became speculative assets. Collectors believed certain issues would rise in value, like stocks. Marvel leaned into this belief, releasing endless special editions, variant covers, and limited runs. Sales skyrocketed. Revenue surged. On the surface, Marvel looked unstoppable. In 1989, financier Ron Perelman acquired Marvel and took it public. The company expanded aggressively, buying trading card businesses, toy manufacturers, and even its own distributor. Growth was fueled by debt. Leverage replaced stability. Marvel was no longer just selling stories, it was betting on perpetual hype. By 1993, the speculation bubble collapsed. Collectors vanished. Retailers were left with massive unsold inventory. Sales fell sharply, but Marvel's debt did not. At the same time, the company had pushed away key creative talent and locked itself into licensing deals that traded long-term value for short-term cash. In 1996, Marvel filed for Chapter 11 bankruptcy protection. Survival depended on selling film rights to its characters. Spider-Man went to Sony, the X-Men and Fantastic Four went to Fox. Marvel stayed alive, but it no longer controlled how its heroes were used. Studios made billions. Marvel collected fixed fees. This imbalance became the core problem. In the early 2000s, Marvel made a radical decision. Instead of licensing characters, it would finance and produce its own films. To do this, Marvel took out a massive loan, using its remaining characters as collateral. If the films failed, the characters would be lost forever. This wasn't creative optimism. It was a calculated financial risk. In 2008, Iron Man succeeded, not just as a movie, but as a system. Marvel proved that interconnected films could function like a portfolio. Each success reduced the risk of the next. Characters promoted each other. Audiences were trained to follow phases, not sequels. Marvel wasn't selling movies anymore, it was building infrastructure. In 2009, Disney acquired Marvel for $4 billion. At the time, some analysts questioned the price. Within a decade, the Marvel Cinematic Universe generated more than $29 billion in box office revenue alone. Merchandising, streaming leverage, and brand dominance multiplied that value even further. The winners were shareholders, global studios, and a new model of franchise economics. The losers were competitors who failed to adapt and studios locked into standalone thinking. Marvel didn't succeed because it had the best heroes. It succeeded because it learned the value of ownership, patience, and long-term systems. The company collapsed when it chased hype, and it rose when it treated stories like infrastructure. In finance, as in fiction, the real power belongs to those who control the universe they build.